Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris Rapeseed, Winnipeg Canola, and Malaysian palm oil.
Paris Rapeseed. Since the triple top at the end of last year and the start of this year, we saw prices generally head lower until mid-March. On the way down, prices were held up significantly, with changeover in February by the gold long moving average, currently 493.5. The gap was originally 490 to 509.75, but ended up being partially filled in before early March. And before early March, we saw turning lower still, with another smaller gap since filled in. The fall ended with a hammer pattern mid-March, and prices rose again, forming a V-bottom pattern. Now, I thought there was seemingly another more interesting pattern developing here. You see, the fairly flat run-in during February, the drop and rise in March, made the whole action, as I mentioned 3 weeks ago, look like a possible bullish diving board pattern. Okay, so I said 3 weeks ago, and I quote, "This move should see a further recovery over the long moving average and a hesitation between there and the medium moving average further up," and that's currently at 498.75. Before in due course another move higher, end of quote. Unfortunately, the market had other ideas as prices rose up to meet the gold long moving average and was stopped dead there 3 weeks ago, promptly falling away again in a series of counteracting bullish and bearish patterns, which have seen prices capped by the declining green short medium moving average above, it's currently 481.5, and roughly the 50% Fibonacci line of the May 23 to January 25 move below. All this allowed me 2 weeks ago to draw a prospective late February to early April dark blue bearish Andrews pitchfork. As I said at the time, I'm not wedded to this pattern, and I'm quite prepared to finesse this to a shallower bearish shift pitchfork or retire it completely. But for now it will do in showing the most recent bearish angle of attack, end of quote. Well, the upper tie, currently at 468.5, was breached on the upside during the middle of last week, and prices have ridden down the outside of this dark blue bearish pitchfork ever since, something I have seen happen in pitchfork patterns in other markets. Hence, I still consider the bearish Andrews pitchfork pierced but not yet truly broken. This nevertheless has still prompted me to draw a shallower bearish shift pitchfork with the same move. On this pattern, we are right now in between the overhead upper time, currently at 488 even, and the middle time below, currently at 463.5. I'm not very happy about drawing two pitchfork patterns at the same time because it does lead to confusion. But as I suggested earlier, all this suspends for now the idea of a possible diving board pattern, though it does not give a ready alternative as yet. Winnipeg Canola. From November last year until late February this year, the market started, for the most part, a 3 steps up and 2 steps down action, gradually moving higher. This overall action higher left us with an important December 24 to early March 25 ascending wedge pattern. 8 Fridays ago, the market closed below the lower trend line for the first time and started the resultant move lower from this pattern, accelerating the fall with a gapping changeover low which was covered 3 weeks ago. For this original move lower, I laid out primary and secondary, even a tertiary target. All of them were reached, and the market's fall was stopped by a combination of lows at 567 even, 571.80 and 575 plus the neckline extension, currently at 556.70 of the April to June 23 reverse head and shoulders continuation pattern. Now I'd also possibly throw in the September 2024 low and pipe bottom at 553.5 and the October 2020 high at 552.80. We didn't reach all of these, but the proximity and market actions on approach to these suggested a swift and immediate pullback up for prices. The recovery higher, though dramatic, had some issues. For instance, there is no weekly key reversal, or even the lesser outside week opportunity here as seen in other markets which had similar moves. The initial reason I gave was because we had the previously mentioned 50% absolute Fibonacci line overhead back then at 606.90, and this seemed to put off initial attempts higher. However, as I said 4 weeks ago, and I quote, "The action over the last 3 weeks," so that's 7 weeks ago, "does suggest the construction, or at least hints at the possible construction of an ascending wedge pattern, possibly even an ascending triangle. We shall see on that, but it's worth paying attention to if we do go down this route," end of quote. Well, prices shot up through the 50% absolute Fibonacci line 4 weeks ago, hesitating for a bit around the moving average congestion area between 626.60 and 639.30, as well as the 2021 low at 629.60. To explain this move upwards, I spoke through because there was a possibility here for the start of February today being a bullish diving board pattern. However, I did add that and I quote, pattern here is very, very crude, and the run-in during February not looking very straightforward in my eyes. The plunge in early March looks good, but the recovery higher in late March looks indecisive at the start, though we've since become more determined. End of quote. Prices have continued their journey higher, making a significant move up over the February high, despite a ropey start. This is a better bullish diving board pattern all in all than seen elsewhere, but it is nevertheless still running into resistance at the February high at 682.20 and the earlier July 2024 high at 685.30. Now, to give some context to these moves upwards, here is the data regarding diving board patterns. Nearly 9 out of 10 times the price rises as far as the bottom of the board. Now, this is not a good example of a diving board pattern, but I would regard this as being about the 2021 low at 629.60, which we have seen. A quarter of them then rise up within the diving board pattern itself, so between 629.60 to the June 2021 low at 655.90, which we have also seen. Just over 6 out of 10 times prices rise up over the diving board, and that is over 655.90, which we have also seen. Now, to add to this, or this week we are very close to setting up a possible weekly key reversal. It would all depend to start with on making a higher high than last week, so over 687.10. This is the level to watch for this week at the moment. Bursa Malaysia crude palm oil. Prices have over the last 3 weeks broken down through some major structural supports. To start with, there is the neckline currently at 44.90, the neckline extension of the September to November 2023 reverse head and shoulders pattern, which I had highlighted repeatedly, and which, while supporting the market during March, this week we have gapped below. Next, and this one I also commented on many times previously, is the neckline extension currently at 44.98 of the September 2015 to November 2017 head and shoulders top. I've not been sure about this in the past, but as it's an old one, a super old one, that had been way below the market back in the day, but similarly to the earlier neckline, had in the earlier part of this year significantly supported the market, but failed again 3 weeks ago. The third pattern here is the now flatlining gold long moving average, currently at 43.96, that stopped the market's fall dead in mid-January and late March, but which failed 2 weeks ago. Now, there are other newer, in some cases close to the market features that have helped hold up the market, that have given way, and to start with, I'd look to the wide congestion area now overhead between 44.08 to 45.59. This is now weighing down on the market. Next, possibly finally, 4 weeks ago I drew a mid-February to early March mildly bearish shift pitchfork, highlighted in pink on my daily chart. A more acute bearish Andrews pitchfork with this move does not work, so it's very much this pattern or retiring it completely, which I was quite prepared to do. For March and the start of April, this pattern had shown the bearish angle of attack, but 2 weeks ago prices penetrated the pink lower time, currently at 42.76, initially down to the significant combination of the 38.2% Fibonacci line of the May 20 to March 23 move, and the 50% Fibonacci line of the May 23 to December 24 move, both at 42.74, and even as far as the lesser Fibonacci line at 42.39. I said 2 weeks ago on this, and I quote, "For the moment, I'll still keep an eye on the pink bearish shift pitchfork, but it seems that some significant bearish pressure is meeting some quite substantial bullish supports. Something has got to give, and for now it is looking like the downside might. If it does, then apart from the July 23 high at 41.89, we might not have anything of note below until the congestion starting at 40.26. Caution." And that's the end of my quote. Well, last week we gapped lower and dropped down through the 40.26s in the zone and lower. But this was an elastic move lower with a swift move back up early this week, back up over the 40.26 level. Interestingly, the low was just short of the dark blue neckline extension, currently at 38.91, of the small late May to April 2024 reverse head and shoulders bottom. This is one to watch on the downside, as is core. It is the core of the large April to September 2024 congestion zone, stretching from roughly 3750 up to 4100, and where we are currently sitting within. These actions have brought to my mind another new pattern that may be just about completing, but which can even now still be derailed. Is to look at the whole move down from the high back in early December 2024 to date as a really big halfway hesitation pattern. To give an idea of the potential on the downside, we have a possible target X down at 3750, which is right on the far end of the congestion we are sitting within right now.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.